If the whole system starts to break apart, it's not just the banks that will be affected, it'll be the insurance companies as well. And so being your own bank, being your own insurance company, looking at gold and silver not as an investment, but wealth outside the system, removal of counterparty risk. And I think that's part and parcel to why we're seeing the drawdown of metal from these exchanges.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for February 28th through March 7th, 2023, while supplies last. This week we feature two coins from the Royal Canadian Mint: the sought-after 2013 Silver Pronghorn Antelope at $3.99 over spot, and the 2022 Silver Maple at $3.40 over spot. The Silver Pronghorn Antelope was made for the Low Mintage Limited Run Wildlife Series, where just 1 million coins were minted over the course of 6 months, and then never issued again. With a focus on beautiful design, a face value of $5 Canadian, and RCM's strict 4/9 fine purity, these coins further add a degree of rarity to the mix. They come 25 to a tube, 500 to a box, and are available at just $3.99 over spot. We also have 2022 Silver Maples on special. Silver Maples were the first silver sovereign coins to be minted at 4/9 fine purity and remain one of the most in-demand coins today. They come 25 to a tube, 500 to a box, and are available at the lowest premium we've seen in more than a year, at just $3.40 over spot. Both coins this week are also IRA eligible, and if you'd like to learn more about a precious metals IRA, call us and we'll be happy to help you in that process. To order these specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're always grateful to have this returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals. He joins us for this weekly market update this Tuesday, February 28th, 2023, last day of February.
Good to see you, Don. Again, thanks for having me, buddy.
All of our viewers tell me, when is Andy going to be coming on next? And hey, next time you talk to Andy, ask him this, ask him that. And I try to remember most of those questions that get submitted specially just for you. I know one of the concerns that people have right now is potential strains in the banking system. Our mutual friend Gregor Manarino has been writing with increasing urgency about that in recent weeks, about strains in the banking system and increasing levels of nightly injections of liquidity by the Fed to keep the wheels from falling off as they're pumping liquidity and capital overseas rather than here domestically, which a lot of people, I think, if you ask them on the street, would have no idea that our Federal Reserve is actually pumping tons and tons of dollars to countries and banks around the world rather than looking after what's happening here on the home front. Although Alistair McLeod, who I'll be interviewing in about an hour, sometimes tells us it's all connected anyway. So your view, if you would, of the fragility of the the debt markets and the banking system, as many clients consider that to be one of the reasons that they consider turning away from and withdrawing their funds from banks and putting them into more solid savings accounts, such as precious metals.
It's huge. And I think the name of the bank is the Swiss Bank Corp. I may get this wrong a little bit. I think it's the Swiss Bank Corp. They're the second world. And the Federal Reserve gave them $10 billion recently to bail them out. They fired like 9,000 people because of the systemic nature of it. You look at a bank like Credit Suisse, Credit Suisse is called I think it's a GIS bank, a globally systemic important bank, just like Bank of America, Citibank, any of these too big to fail banks. This bank, Credit Suisse, watched $1 billion of depositor money be withdrawn in the fourth quarter. It's called a globally systemic, too big to fail bank. And this is what Alistair means by they're all connected. Why is the Federal Reserve bailing out a bank in Switzerland? Why isn't it the Swiss National Bank that's doing it? When you talk about the November meeting, I mean, I've really tried to beat people over the head on this. The December meeting of the Systemic Resolution Advisory Committee by the FDIC, who basically told the world. Although I don't think they intended to tell the world.
No, it was a leaked video. We'll put a link to it in the description of this interview because it's so important.
Right, and they said, look, the public who has more confidence in the banking system than the members of this committee do. That alone almost made me fall off my chair. They need to understand, the public does, that there will be bail-ins and there will be runs on the bank. They need to understand this. But if we tell them this, it'll lead to unintended consequences. And they went on to say that the banks and the institutions understand that there will be bail-ins and that there will be runs on the bank. And we understand this, but we are at kind of a crossroads here. We probably don't want to let the public know that this is coming. So we're being lied to by omission. And when you see a bank that is called too big to fail systemically, globally, swirling down the drain, getting crushed, having depositors pull all their money out, they're all connected, they're all tied together systemically. Why else would we be bailing out the second largest bank in the world in Switzerland? Why not have the Swiss National Bank do that? So yeah, I think it's never been more important. And if you go back to the pandemic when the banks were allowed to remove all of their reserve requirements, I mean, even if you put in $100,000 into the bank's not going to leave it there. Why would they? They're paying you next to nothing in return, specifically, right? They're giving you, even though rates have gone up, why are you not getting anything on your savings account? Because they're taking that money and even buying 90-day treasuries with it, paying 4%. They don't have reserves on deposit if everyone comes calling at the same time. It's just like Bernie Madoff, when everyone tried to pull their money out at the same time, it led to a daisy chain, a systemic daisy chain that brought down the whole system or the whole Ponzi scheme. Well, that's exactly what we'll see if this happens. And we're being told it's going to happen. The FDIC Systemic Resolution Advisory Committee told their members that this is going to happen, and the banks already know it's going to happen. We just can't tell the people. So, yeah, I think being your own bank, being your own insurance company, I don't think we talk enough about the insurance companies because they're just as systemically tied to this whole quagmire as the banks are. Where do they invest their money? In stocks and bonds. And so, if the whole system starts to break apart, it's not just the banks that will be affected. It'll be the insurance companies as well. And so being your own bank, being your own insurance company, looking at gold and silver not as an investment, but wealth outside the system, removal of counterparty risk. And I think that's part and parcel to why we're seeing the drawdown of metal from these exchanges. I talk a lot about our Brinks JFK location, which is the only COMEX depository. And the story I told of our large client who has over 1 million ounces of silver in 1,000-ounce bars there and wanted to store them in Brinks Salt Lake City, which is not a COMEX depository. Only JFK has. And I was advised that if they get moved out of there, they lose all their industrial liquidity. And I said, well, why? Brinks to Brinks, why does it matter? Because it leaves the COMEX ecosystem. And when it leaves the COMEX ecosystem, it's lost industrial liquidity if Elon Musk or Sony or Samsung or Apple wants to pay a massive premium for those 1,000-ounce bars. They have to be reintroduced into the system. So when we see metal leaving COMEX the way that we have been, it's a big deal because it is, on one hand, the removal of counterparty risk. That's what they're thinking. But as far as the liquidity aspect of it, it's a big haircut in liquidity. And so that's not even a factor. It is more important to remove the counterparty risk than it is to have the liquidity. It's a one-way ticket, if you will. So maybe this is part of the reason when you talk about systemic chain reactions and how it can help actually bring down the whole system, not just the banks, but all the institutions that use banks to conduct daily business. And these bullion banks are not immune to that, the JP Morgans of the world. Remember, Bear Stearns went bankrupt largely because silver went to $21. I have always urged people to watch the Chris Marcus Bart Chilton interview. Chris Marcus Bart Chilton, Arcadia Economics, where he admits this. Bear Stearns went bankrupt, silver went to $21. Jamie Dimon, you need to take over the position. He admits this and goes through the whole rigmarole of how it happened and how he told his superiors that J.P. Morgan had not pared down their short position as they agreed to when they took over the position. And in fact, they increased it and was told to back down because it was a political decision. Now, he died a week later. Is that coincidence or not? Don't know. I'm not saying it is. But what I am saying is the only time I've ever heard any official of that level, the head of the CFTC, admit to all of the conspiracies that we talk about. And so when you talk about these banks that are systemically tied together, Credit Suisse, I guarantee you, has been very active in the precious metals market over the years, just as Bear Stearns was. And so when we talk about removal of counterparty risk, it's much deeper than just the money that you have in the bank. It can bring down the entire system and all of the periphery around it and the corollary banks that are tied together systemically. One goes, it's a daisy chain. I think it's never been more important to realize that. And the public doesn't. And that's exactly what the FDIC was saying. They don't get it yet because, as they said, the public who has more confidence in the banking system than the members of this committee do, they need to know what's going to happen. But if we tell them, it's going to create a run on the banks. I mean, what more do people need to hear? And it's amazing that an article or video leaked out to YouTube doesn't leak out to Fox News or to CNBC or any of these entities that claim to be giving us the information that's really important. And they're not. And this is a big deal. Catch a lot of people off guard.
One of the things that you asked early in this particular section was you talked about why is the Federal Reserve bailing out foreign banks? Why aren't their own countries doing that? There's a practical answer. The practical answer is the one you focused on, which is because everything's tied together, and if one goes down, they all go down. There's also an intrinsic answer, which comes from what is the origin of the Federal Reserve, and people who still are not aware that it is not part of the federal government, and it is not an American institution, really, that the founding members of it have ties that go back to Europe and have frankly had those positions of no allegiance to any state, no country for 4 or 5 centuries, and have been playing both sides of wars and financing of wars and that sort of thing for centuries, realize that these people and these institutions do not and never have had the best interests of the American people or any country's people at heart. Any further thoughts on that before we move on?
I just think that people need to understand that the FDIC won't be able to cover their deposits. There's under $200 billion in assets backing $9 trillion in deposits. And the thing that really I think is frightening is that the losses this time are going to dwarf the Great Depression because the whole system is way more leveraged than it ever was. So yeah, be your own bank, be your own insurance company, be your own annuity, be your own 401k. I think it's never been more important, unless you believe that things are not as systemically tied together as they are. I think that's a mistake.
And that's why I keep hearing from clients every week, people who are selling homes, selling condominiums, selling ranches, selling oil leases was the most recent one, and expect to have a big, whether you call it a windfall, but basically a big nest egg plopped into their lap because of this, and they want to put it someplace safe. And they're very concerned that the bank is no longer that place, that they should be keeping their nest egg. And there's a big difference between having enough in the bank that you can do transactions versus keeping your nest egg in there. So.
Correct. Yep. Good point.
For those who want to establish a non-banking savings account that is intrinsically valuable, that is durable, that has a track record of carrying value into the future, whether it's just for their own potential future opportunity or need, or for that of their future generations in their family tree, what do we have to offer people to help make that affordable this time?
We're sticking with the 2022 silver maple leaf at $3.40 over the price of silver. Again, I bought as many of those as I could. I think it's as good of a value as anything that we've seen in 3 years. You look at the Silver Eagle, which is still priced north of $9 an ounce, has not come back down, which is another topic of discussion in and of itself. But the maple leafs were $5 or $6 an ounce higher as much as just a few months ago. $3.40 over the price of silver for those. And we have about 12,000 2013 Call of the Wild Antelope that most companies, if they had them or on eBay, will be multiples of what we're selling them for. They only made 1 million of them. Each of these Call of the Wild animals, which have a huge following, have for years, have only 1 million minted of each. And we do have them in sealed mint boxes and tubes of 25. And those are $3.99 over the price of silver. You'll find them on eBay for $40 and $50 a piece. We have them at $3.99 over spot, and don't expect those to last very long, but I was able to secure about 13,000 of them.
Yeah, I often get calls from people saying, hey, do you have the, and then fill in the blank, some Call of the Wild series, and it's very difficult and uncommon that we have those in stock. So to have them in quantity in stock, but be aware, folks, and we've said this before, when we announce a weekly special of something like this that's rather unique, it tends to sell out really quickly. So please don't wait a week or two and talk it over that long before you call me up and say, do you have this in? Because we won't by then. So please take action quickly if you want to make sure you get your hands on these. And Andy, the thing you other mentioned in passing there was the lack of retracement proportionately in premiums on American Silver Eagles. Those hit, well, depending which dealer you look at, with Miles Franklin, they hit like the $13, $14 over spot range about 4 or 5 months ago, and they were higher at other dealers. But they have retraced somewhat. We're at the roughly $9, depending which year you're going after. But can you talk to us about why we aren't seeing pullbacks in those to the good old days of a couple bucks and change over spot?
Well, there's a lot of conspiracy theories out there, Dunnigan. A lot of people are talking about the fact that maybe the U.S. Mint is stockpiling them on behalf of the government, who exhausted its strategic stockpile of silver decades ago. Look, we understand that silver is used copiously in industrial applications that are expanding in digital and electronic applications, in solar panels, in battery-powered vehicles, and all of these things. But remember, there's 500 ounces almost to the button in the tip of every Tomahawk cruise missile, and all these advanced weaponry applications in terms of guidance systems. There's a tremendous amount of silver. It should be a strategic metal. And maybe this is why we saw India import 304 million ounces of it this year. And so when you talk about conspiracies, they made about 14 million silver eagles this year. In 2012, 13, and 14, they were making 40 plus million a year. And so their ability to make as much as 4 times as many silver eagles, and Janet Yellen told us they ramped up capabilities this year. It's befuddling. Maybe they are stockpiling it. Maybe they are accumulating it and stockpiling it on behalf of the U.S. government. It doesn't make sense that we are able and have been able for 3 years to get coins from across the Atlantic Ocean much easier and much less expensive the entire time than we have been the American Eagle. As one of only 24 U.S. Mint authorized resellers in the world, it has been ridiculously difficult. And the fact that the premiums haven't come back down, but all the other 5 sovereign mints have, Austria, Australia, South Africa, United Kingdom, and Canada, they're all fraction of a premium compared to the American Eagle. And it's very befuddling. And I think it lends itself to those types of, I don't know if you call it a conspiracy theory, but that type of thought process where, well, maybe that's exactly what they're doing. They finally realize how important it is, and they're stockpiling it and suppressing the paper price to accumulate as much of the physical silver at a subsidized price as they can. Because in the end, look at what the countries like China are doing, massively accumulating commodities. They're not just accumulating gold and silver, they're accumulating aluminum and zinc and wheat and soybeans and oil. And I mean, all of the things that you would need, they're accumulating. And that's a very, very big deal. It's not just them. I mean, look at Turkey. We talk a lot about Turkey, who joined the BRICS nations or formally applied for the BRICS nations. And in January alone, first of all, they were the largest importer of gold in the world in 2022. And in January, they imported almost 59 tons of gold. That's the most gold that the Swiss refineries have ever exported in a month. And so you're looking at countries that are looking at gold and silver, and Turkey, by the way, has imported a tremendous amount of silver as well. These are countries that are realizing just how important it is to accumulate things that in the end are what you need to advance your society. One of the things that Ed Steer put up that I found very interesting the other day was the chart of India's gold imports. We talk a lot about their silver imports of 304 million ounces last year, which is more than the COMEX market has, almost 10 times more than the registered category. But if you look at the amount of cumulative imports, and you can Google this, it pops right up, it blew me away. Since 1999, and this is documented, India has imported more than 17,170 metric tons of gold. Now, that for a second, that's twice what the United States supposedly has at Fort Knox. And we're supposedly the largest holder of gold. Alistair, who you're with next hour, talks about China having 38,000 metric tons of gold by his measurements, of which the state owns 20 and the people owns 18. Of this 17,000 metric tons of gold, obviously a lot of it is not to the government, but to the people. But how much do we really know? And when we see these governments copiously accumulating gold and silver while we poo-poo it in the West, maybe they finally have woken up to the fact that, geez, we better start doing this ourselves. And we'll tell the world that we've ramped up production, but we're only going to make 14 million silver eels. Now, that sounds like a lot, but it's at least 25%, only 25% of what they have shown in the past they have the capability of doing. And I just think maybe they are waking up. And I want to mention one other thing that has given me a little bit of optimism, if you will. I talk a lot on your show and others about how it has been the acquisition of gold by the central banks of the world, buying more gold than at any time in the last 55 years, and the second most in history. We talk about China and India and all of the importation that they're doing. But I don't think that really wakes people up. Sure, it wakes up the people we're talking to, which represent the pimple on the elephant's rear end. The elephant hasn't figured it out yet, but God bless some of these states that are waking up and might light the fuse, if you will, to awakening people, such as the state of Missouri and such as the state of Wyoming, who just passed bills to accept gold and silver. We've talked about this on your show last week as legal tender for debts public and private. It's the same thing is being proposed in the state of Kansas. There are right now lawmakers in 42 states that have already removed all or some taxes on the purchase of gold and silver, and there are now bills pending in 5 of the 8 states. Of course, Minnesota is not one of them where I come from, but 5 of the 8 remaining states that still charge sales tax, they're removing it. Mississippi just did, so now we can take that out of the 5 of the 8. They were one of the 5. They just passed legislation to remove sales tax. That goes into effect in July. But you're seeing these states that are recognizing the brain dead monetary policy of our Federal Reserve has created consequences that is making them, I think, look out for their citizens first and foremost. And I never thought I'd see the day where states in the U.S. would allow gold and silver to be used for debts, public and private. Well, maybe that's the fuse that wakes up or lights the fuse underneath the public and wakes them up to what's happening, because a good portion of the world is seeing this already when you see the amount of gold. When Alistair says 18,000 of the 38,000 metric tons that he believes that China owns is owned by the people. I wonder what that is here in the U.S. Just how much gold do we own, even in the form of jewelry? Very, very little in comparison to many of these countries that are using gold and silver, I think, to bridge the gap between one system to the next. So anyways, I digress. I just wanted to say that I'm very optimistic when these states are acknowledging gold and silver as money. Maybe this wakes up the public and really changes the dynamic in the years to come.
Yeah, one last thought that I think you just touched on there as far as what we can do as ordinary people versus these huge forces that are at play globally and systemically and all that. Most people just feel, first of all, they don't even understand it. We're meant to not understand it, and also to feel powerless in the face of it. But the point that you're bringing there is that there is power in individual action to take care of yourself, your family, your neighbors, your friends, etc. And that's where we are strong, is when we are focusing on what we can do rather than what we have no power over. And we're grateful for that reminder. Andy, I'm sorry our time is short today, so we'd like to go on and delve into all these other topics. We'll have to do that on a future visit. Maybe we'll have more time. But I wanted to thank you for your visit here again with this weekly market update. And folks, if you don't want to miss a single one of these, and I have people tell me that every week, is like, well, they'll say, this is the special, isn't it? And that was from 2 or 3 weeks ago. And I'll remind them that if you don't want to miss a single weekly market special that comes from Miles Franklin, make sure you subscribe by going to libertyandfinance.com, put your name, your email address, click submit, and then make sure you acknowledge the confirmation email, and you'll get every single interview with Andy on these Tuesday nights, the link sent to you in your inbox, as well as all of our other guests and our weekly special. So you won't miss that. So Andy, on behalf of all of our viewers, just thanks for joining us on Liberty and Finance. And if you have any parting thoughts, we'll be happy to hear them.
No, it's all good. Done again. I'm battling a pretty severe cold, so it's all good. I love being here. I love my relationship with Liberty and Finance. You guys are the class of the industry, and it's just a pleasure. I'll see you next week, and stay well, you and everyone else out there.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.